And the fundamentals for the euro are the following. Eurozone's growth outpaced the US for the first time since the 2008 global financial crisis. According to the data released during the past week, the region's GDP added 1.7% in 2016. Earlier, it was reported that American economic growth last year accounted for 1.6%. Meanwhile, euro area's consumer inflation accelerated from 1.1% in December to 1.8% in January. And inflation actually approached the European Central Bank's target of close but below 2%. The increase was caused mainly by higher energy prices. However, we can see that the European Central Bank has denied calls to start tightening its monetary policy, although some members have expressed thoughts that the time to consider the so-called tapering of quantitative easing program is coming closer. Today we will hear more from the ECB President Mario Draghi. He will likely underline that there is the environment of high political uncertainty for the euro area, that inflation expectations are still firmly anchored, and he will try to downplay this recent spike in inflation as he did at the last press conference. We can see that although there were some positive data news from the euro area, there are some negative factors for the single currency as well, and primarily these negative factors are political factors, political uncertainty, which comes in first place from France, where the leading presidential candidate, François Fillon, got involved in a scandal. And as a result, the risk of better results for the National France candidate, Marine Le Pen, who wants France to leave the euro area, has increased. So we'll likely see further pressure on the euro from this source. We can see that the markets are increasing the risk premium for France. Despite the fact that Fillon is trying to fight, he is not willing to step down as the Republican candidate. Still, the markets have a negative view of the risks and of the political picture of the euro. This is why we can see the sudden pressure on the European currency. This is the weekly chart, and technically we can see that the euro dollar managed to close last week in a positive territory around 107.80 after initial drop to 106.18. This fact is positive. However, if we have a look at the daily chart, we can see that euro dollar faced significant resistance in the area of 108.30. Here we have the top of the daily Ishimoku cloud. In addition, if we make Fibonacci levels here, Fibonacci from the high reached in May 2016 to the minimums of December 2016, we can see that it is a resistance formed by 38.2 Fibonacci retracement level as well. So when we have confluence of different resistance levels, surely it strengthens this resistance. Here is also the upper Bollinger Band of the daily chart. MACD indicator is declining. We have a negative signal from stochastic oscillator on the daily chart as well, and this leads the single currency to test lower levels. What else do we have here? We have here the decline in 100-day moving average, and actually during the last 5 days, euro dollar didn't manage to close above this line. This line has already acted as a resistance for the single currency back in November. So this is why this price action of the euro dollar may mean that the single currency is going to dive lower before it has any chance to continue its way to the upside. Levels to watch on the downside include 106.80 mark. We can also draw a support line here. Here it is, support line from the minimums of January and February, and it will be somewhere, well, around 106.80 as well. So, yes, to be more precise on the 4-hour chart, support levels were around 107, 106.80. Further support is at 106.40. And then on the 4-hour chart, we have 200 pivot moving average at 106 mark. These are levels we will be targeting on the downside this week. Also, I'd like to make you look at the weekly pivot levels. This is the indicator which shows us whether the single currency is situated at the positive or at the negative territory on the weekly basis, and what are the weekly support and resistance levels, which usually act as the likely targets. So euro dollar is now trading below the weekly pivot level, which is located at 107.44, and the first weekly support is at 106.59. And the second weekly support is located at 105.34. So these levels may be used as targets in your trading, in your bets against the single currency. I would recommend going long on the euro above this moving average, which is located at 107.83. And in this case, the conservative target should lie at the first weekly resistance line, which is located at 108.68. The next weekly resistance is at 109.53. And actually, I think that we shouldn't expect any increase beyond 109.53 for the euro dollar. This is where the resistance line, which can be drawn since May highs, is situated. So tops for the euro dollar around 109.50. Though I think that the main scenario we'll likely see unfold this week will be to the downside for the euro dollar. We are now seeing the currency trying to erode these support levels, and we will have a look at 107 support. All in all, we can see that the picture for the euro dollar looks, of course, very uncertain. The most important thing to look for from the technical point of view is whether this bullish trend remains intact. And if it is not, it will be a good bet to bet versus the euro, as there are a lot of political risks for the single currency. However, if we see a kind of good reversal pattern here above the support line, then it means that the US dollar is even weaker than the euro, whereas concerns about Trump are stronger than concerns about political future of the euro area, and that the single currency has a chance to make a kind of moderate recovery to the area of 108, 108.68 is the conservative bullish target for this week.